Okay, let's get right into it. We're going to talk about a huge financial tug-of-war that's defining a generation. The battle between paying for college and trying to buy a home. We're going to break down exactly how one of these dreams is putting the other on hold. And the numbers are pretty staggering.
For as long as most of us can remember, this has been the goal, right? Owning a home isn't just about four walls and a roof. It's supposed to be the main way you build wealth and plant your flag of financial security in America. It's like the financial finish line. But for millions of people, that finish line is getting pushed further and further out of sight, all because of one colossal shadow.
And this is that shadow. Over $1.9 trillion. That's the grand total of student loan debt in the U.S. To put that in perspective, that's more than what Americans owe on all their credit cards and all their auto loans combined. This isn't just a number on a screen, it's a massive financial weight that is fundamentally changing the future for millions.
So, how exactly does this one debt throw such a massive wrench in the gears of the American dream? Well, it basically creates two giant roadblocks that make it incredibly hard for people to even get to the starting line of buying a house.
This chart just lays out the whole conflict perfectly. On the left, you've got the traditional playbook for getting a mortgage. And on the right, well, that's student debt, acting as a barricade at every single step of the way. It makes saving up that big chunk of cash for a down payment feel impossible. It pumps up a key number called your debt-to-income ratio. And honestly, the stress of those payments can even put your credit score at risk.
Let's really dig into that first hurdle, the down payment. We all know you need a pretty big pile of cash to buy a house. But when you have hundreds or maybe even thousands of dollars getting automatically sucked out of your bank account every single month for a loan, well, that's money that just can't go into savings. It's this constant, relentless drag that can push the dream of homeownership back by years or even decades.
And listen, this isn't just a feeling people have. It's a measurable, statistical fact. The data shows a direct link. For every extra $1,000 someone has in student debt, the odds of them owning a home go down. It's a straight-up cause and effect relationship.
Okay, now for that second huge hurdle. To get this, we have to understand this one critical term, debt-to-income ratio, or DTI. Sounds kind of technical, but the idea is simple. Lenders look at how much money you make each month, and then they look at how much of that money is already spoken for by debt payments. That number, that percentage, is absolutely crucial when you apply for a mortgage.
So picture your entire monthly income as this whole pie, right? Lenders want to see that all your debts, your car payment, your credit cards, and your potential new mortgage don't eat up too much of that pie. But look what happens here. When a giant slice is already gobbled up by student loans before you even start, there's just not enough pie left over for a mortgage payment. You get squeezed out, financially speaking.
And here is the magic number, or maybe the unmagic number. Most lenders want your total DTI to be 43% or less. With a big student loan payment already on the books every month, staying under that ceiling is a huge challenge. It often means a lender will either deny your application or maybe approve you for a much smaller loan than you actually need. You know, all of this builds up to this really weird and frustrating paradox. We're always told that higher education is the ultimate investment in your future, the thing that will put you on the fast track to success. But for a whole lot of people, there's a really big catch. This timeline basically shows how that promise gets broken. You follow the script, you go to school, you get a degree so you can land a better job with a higher salary. Perfect. But then bam, step 3 hits. That massive debt payment from step 1 completely hijacks the extra income from step 2, and it stops you from building wealth in step 4. The short-term cost is now canceling out the long-term benefit for so many.
And it's really tempting to see this as just a collection of individual problems, right? But when you have millions and millions of people all delaying one of the biggest economic decisions of their lives, it creates these massive ripple effects that impact all of us and the economy as a whole.
And this right here is one of the most serious and, frankly, sobering consequences. Because of historic wealth gaps, Black students often have to borrow more money to get through college, which means the debt burden hits them that much harder. The result is, it's just shocking. Research now shows that young Black college graduates have a lower rate of home ownership than young white adults who didn't even finish high school. Let that sink in. Student debt is actively making the racial wealth gap wider.
And the dominoes just keep falling from there. When people have less disposable income, they spend less money on everything, which slows down the whole economy. The housing market takes a hit because there are fewer buyers for those starter homes. And since owning a home is the #1 way middle-class families pass wealth down, this whole situation slows down generational wealth and is even linked to people putting off getting married and starting families.
So, the big question is, what do we do about this? Is there a way out?
Well, it looks like we need a two-front attack. First, practical strategies for people who are in the thick of this right now, and second, bigger systemic solutions to fix the broken machine for good.
So, if you're in this boat, there are some smart moves to make. Number 1, look into income-driven repayment plans, or IDR. These can lower your monthly student loan bill, which directly helps that all-important DTI ratio. Second, check out down payment assistance programs. Almost every state has them, and they can help you clear that initial savings hurdle. And of course, keeping your credit score in top shape is always a must.
But let's be real. You can't expect individuals to solve a systemic crisis all on their own. We also have to fix the root causes. That means seriously tackling the insane cost of college in the first place, so people don't have to borrow so much. It means updating the mortgage rules so they actually understand these new repayment plans. And it means creating targeted policies, like grants and forgiveness, to address the deep racial inequities this crisis has made even worse.
And so, that leaves us with the central challenge, the big question we have to answer. How do we rebalance the scales so that getting an education goes back to being a clear launchpad to financial security, instead of an anchor that holds you back from it? That's the puzzle that policymakers, lenders, and all of us really need to solve.